Starting trading and selecting the indicators to use can be tricky. There are hundreds of thousands of indicators out there, but what are the best and easiest indicators to start trading with? Let's take a look at Chart Prime's top 3 picks, which offer a trend following tool, an oscillator, and a support resistance method to hit all 3 major trading disciplines. Let's start with the award-winning LOWESS, which received awards from TradingView for its unique insights and signals. A powerful tool to get in early on trends with less lag and less noise. Step 1, we plot a unique scatter plot moving average, the Gaussian component. Step 2, we fit a Lowe's moving average through this data to smooth it out. Each of these moving averages has unique properties, making them powerful for trend following, with tons of resources on Google for more detail. But combining these 2 methods can give earlier signals when tracking the market. Now, during an uptrend, our moving average is blue, and during a downtrend, it's purple. Notice how the moving average changes direction faster compared to this SMA and this EMA. We also have the classic buy and sell dots produced, indicating a trend has truly shifted. We also have pivots and breaks cooked into this indicator, where traders can filter market breaks depending on the trend. Let's take a look at some examples. Here we see the market starts an uptrend and we get our classical blue dot. This means it could be a good time to buy. As the market rallies, we see the market break our pivot levels. Essentially, these are break-of structures, suggesting the trend was going to continue, and it could have been a good idea to add to our position. The number of consecutive breaks can also be enabled via the settings. Next up, let's take a look at a support and resistance tool that you can use and you compare with the powerful LOWESS, the zero lag MA trend levels indicator. This indicator leverages a zero lag moving average designed to have extremely low levels of lag when compared to an SMA or an EMA. This means you can get into positions earlier than ever before. Let's take a look at this beautiful moving average in action on our chart. Once loaded, you'll notice the moving average in action immediately. During an uptrend, it will turn green, suggesting the market is starting to rally. And of course, in the downwards trends, it turns purple, showing the market is dumping. You'll immediately notice when compared to a regular moving average, this is far lower lag, turning colors and identifying trends with almost no lag at all. So here in this example, we were in a downtrend and our moving average cloud turns green. This of course tells us that the market is reversing, which it does indeed later. However, traders often like to combine other tools like support resistance levels into their trading. Every time the cloud changes color, we immediately produce an SR level, green for support and purple for resistance. These are of course 100% real time and non-lagging. However, the special thing about these is they're real-time signals for retests. Since the level itself is real time, we can draw an arrow when the market is bouncing off these levels and produce a marker and an indication. So this arrow acts as a signal where we can enter the market for even better gains. Finally, let's take a look at an oscillator, the Chebyshev filter divergences oscillator. This can be perfect to catch those market bounces with very low lag. Firstly, we have our purple and green waves. These waves are actually predictive in nature. This means no, you do not have to wait for the price to start reversing before the oscillator catches up. This is one of the massive shortcomings of indicators like the RSI and the MACD. Here we see we were in a downtrend and that our wave turned purple. This preemptively suggests, hey, we are going to see a reversal. Notice how the market hasn't yet started to move upwards and the oscillator is actually predicting it. Shortly after this color change, the price pumps. Now, this is a double-edged sword, and it's important to note the more predictive an oscillator, the more funky it can behave from time to time. So we strongly encourage this being used as part of a wider trading system. The center line is also dynamic. You will notice during an uptrend, the center line adjusts itself high, and in a downtrend, it will go lower. This is a fantastically powerful feature. If we are in an uptrend, we need to be more responsive to possible market reversals, since the oscillator should be maintaining highs. By moving this center line up, it means we can catch reversals earlier. For example here, the center line moves up and the oscillator crosses below it. Because this center line is higher up, it means we catch the cross earlier before the market dumps. This oscillator will also automatically detect divergences. Simply go to the settings and enable the divergences option, and they will automatically be labeled and detected on your chart. Combining these three indicators into a single system for beginners can be a powerful approach to trading the markets, as they hit all of the key trading philosophies. So, if you enjoyed this video, don't forget to leave a like and subscribe. And if you want to get more free tools like this, don't forget to join our Discord.